Hey, it's Clay at claytrader.com, and in this video, I want to show you why I use candlestick analysis and why I believe you should be using candlestick analysis too, especially if you're a beginner as a day trader, if you're just getting started into this whole trading thing. Then candlesticks and candlestick analysis is truly a great way to make decisions about whatever you're about to do, whether that is make an investment or make a trade, whether you're trading stocks or options or forex or futures. Candlesticks pertain to all those things, and candlestick analysis is, like I said, going to help you make not random decisions. And that's the goal here, okay? We want to be making decisions that are actually based off of data and as much data as possible, not just spinning ourselves around, getting dizzy, and then throwing a dart and then crossing our fingers and saying, well, I hope this works out. Candlesticks analysis, is this stuff guaranteed? Is this some sort of holy grail? I'm not saying that, so I don't want to come across and imply any of that. But my point here is that this is why I use candlestick analysis, and this is why I believe that you should use it too, or at the very least consider it. Now, what you see up here right now is what I think pretty much everybody starts off with when they're just getting started, when they're just a beginner, and that is the good old-fashioned line chart. You pull up pretty much any financial site out there, and you're going to see just the good old-fashioned line chart, which, as the name implies, all it is simply, well, a line. In a line chart, I'm not going to say is totally worthless. I'm not going to say you can't get any value from it. My core point here is that the value you gain from it is very, very limited, especially when you compare it to candlesticks, which I'll get to here in just a second. But I wanted to start off with the baseline that, like I said, I think probably 90% of us can relate to. And maybe, like I said, if you are new and just getting started, maybe this is what you've been using. Maybe this is what you've seen, and you may have no idea what I even mean when I say candlestick. Maybe you're getting ready for me to pull out something that you light with a match, but no, nothing like that. But this is a line chart, and a line chart, all it's telling us is one bit of data, and that bit of data is where is the closing price at? So a little more context here. What we're watching is the overall market, and this is a 1 minute time frame, meaning we're watching what is happening with the overall markets. So this is for ticker symbol SPY, but we're watching what happens with SPY every 1 minute. And all it's going to, so right there, see how it just stopped? So it just told us that during that 1 minute period, the price ultimately closed right up there at 283.85. Now the price is dropping back down. You can see that as I try to circle it, but here, let's try an arrow. That's even harder. But that price there is the current price of SPY. And the line chart is just simply telling us, okay, well, where does the price finally close after this 1 minute period is over? So it's giving us data. It's just telling us, well, where the price actually closed. And if I squeeze this down, again, to be fair, am I saying a line chart is totally worthless? No, as far as just a quick way to gauge big picture trends. So very easily here, you can see that this has been trending upwards. So that's why I say, it wouldn't be in good nature or to say, it'd be misleading to say that line charts are totally worthless. There is no value at all. There's very little value, but there is still some value here. But again, the idea here is that's all it's giving you is one bit of data. And that's what I want to focus on is just the one bit of data. And what I started off at the start about as traders, as investors, we want to have as many parts, as many bits of data as possible to help us make decisions. So now let's look at candlesticks. And if I do my job right here, hopefully I can persuade you to start to use them or at least highly, highly consider it. So here we are looking at a candlestick chart here, and a little history, I'll keep it very brief. Candlesticks were invented by the Japanese back in the 1700s. And what I always like to kind of use that for as to kind of just convince me and keep me convinced that this stuff works is, well, tools that don't work don't last for 300 years and counting. And again, this thing was invented back in the 1700s. So if candlesticks really didn't work, then yeah, I'm pretty sure they wouldn't be around right now. And then also maybe you've seen in whether that be like a movie or a documentary about trading, using the background you'll see on computer screens. And what is that? What is that? The Matrix? What exactly is that? I'm probably revealing my age right there. Give me a comment down below at least. Do you remember when The Matrix came out? That movie was it changed, Hollywood. But anyways, if you see though, is that The Matrix? What exactly is that? Odds are those are candlesticks that you see. So it's kind of a two-pronged attack. What is all the big money on Wall Street? What are some of the tools that they're using to make all that money? And I assure you they're not using line charts. The Wall Street firms and the big hedge fund traders, unfortunately, they're not going to have a line chart up. They're going to be using candlesticks. And then also, like I said, using history. These things were invented over 300 years ago, and they're still being applied right now. Now, the big thing here with candlesticks is 4 pieces of data. Think back to the line chart, 1 piece of data. But in this situation, we have 4 pieces of data that they are telling us. Now, it all depends on step 1. So step 1, you need to go back to kindergarten and ask yourself, what color do I see? Do I see green or do I see red? And I'm not trying to insult your intelligence, but that's literally where this all starts. Nothing fancy, nothing complicated, just literally, do I see green or do I see red? Now, if you answered green, so in this situation, let's take a look at that candle right there. That is the color green. That was, in trading terminology, would be called a green candle. So what does that mean? Well, that means that over this 1 minute period, again, we're still looking at the SPY 1 minute. Over this 1 minute period, the price closed higher than where it opened. So green means the price closed higher than where it opened. So in this situation, a way the candlestick works is that area right here, as far as the candlestick is concerned, is where the price opened during that 1 minute period. And then by the time 1 minute was over, the price was all the way up here. And that line right there is where the close is at. So just to reiterate that, if it's green, that means that the price closed higher than where it was. The opening part of a candlestick is right here. There's a little line right there, which signals where the price opened. Then there's another little line right there, which signals where the price closed. But that's only 2 bits of data, right? But we're already actually well ahead of where a line chart's at, because all a line chart would tell you is where the close was. But in this situation, we now know that the price actually opened up, and then by the time that 1 minute was over, closed all the way up there. So that's 2 bits of data, the open and the close. But a candlestick is also going to tell us 2 more bits of data. It's going to tell us how low did the price go during that 1 minute period, and then also how high did the price go during that 1 minute period. And these are what's called shadows or wicks. So if you ever heard somebody say an upper shadow or an upper wick or a lower shadow, lower wick, this is what they're talking about. So in this situation, it's hard to see here, but the lowest it got was right there. Do you see that little line down below the big solid bar? There's a little line that sticks out, and we'll look at some other ones so you can see this a little bit closer. But that shows that during this 1 minute period, the price really didn't go that low. It only went that low. And then the other part is, well, the upper shadow tells us that the price went up as high as that level right there. But then ultimately, the price did go down a little bit lower because, as a quick little quiz question, well, where did it close? They're saying, well, Clay, it closed right there. Exactly. So at one point during this 1 minute period, the price actually was up there, but it ultimately did drop a little bit and managed to close right there. So those are the 4 bits of data that any candle is going to give you. It's going to give you, so in your mind, say it with me. If you're saying the open, good. It's going to give you the close, good. It's going to give you the low, good. And then it's going to give you the high. Perfect. Now, that assumes that the candle is green. If you're answering that first question, well, Clay, the candle is red, well, then that's where we need to flip things over and look at something differently, because that means, so as far as a red candle is concerned, that tells you that the price closed lower than where it opened. So again, red candle means the price closed lower than where it was at during that 1 minute period. So here you're looking, and in this situation, everything's just flipped around as far as the open and the close, because again, not to insult your intelligence, but that is a red candle. So we know that the close was lower than the open. So that tells us that the opening price during that 30-minute time frame was right there. And then the closing time frame, or the closing price during that 1 minute time frame, was right there. So again, the open right there, and then the close. It just gets flipped around because it's a red candle. And then as far as high and lows are concerned, nothing new there to report at all. You still have what would be the low portion during that 1 minute period right there, the lower shadow, the lower wick. And then you have as high as it went during that 1 minute period right there, the upper shadow, the upper wick. So again, 4 bits of information it's telling us, the only difference being it's a red candle, so therefore this line right there is the open, and then that line down there would be the close. So 4 highly useful bits of data. Where did the price open relative to the close? How high did it go? How low did it go during that, minute or, that time frame? And that's the other beautiful thing is right now we're just using 1 minute. But with, technical analysis, I could change this and we could look at, well, what occurred over the course of an entire day? So right here, let's do that. Let's look at an entire day. And now what is this telling us? So let me just find a random candle right there. So in this situation, on that candle, you can see that, all right, over this entire day, so we're no longer looking at every 1 minute. We're just looking at just a single day. The price opened right there. The price closed right there. Why? Because, hope you're saying, well, Clay, because that's a green candle. Exactly. And then if you look at where the low is at, right down here, and then the high was up there. So overall, you can change these to whatever time frames you care about. Now I also want to do a little comparison, because the nice thing here is that you can watch these things literally play out minute by minute in front of you. So let's pull up this, and what you see here is a candle forming. See how this is changing? So what's this telling us right now? Well, as of right now, the price opened up right here. But see how this green box is getting, well, now it's getting bigger. So, but what is that up? Well, now it's put in a new upper shadow. So that upper shadow right there tells us that's as high as the price went during this 1 minute period. The lowest it went was right there. But isn't this neat to see how this is forming? Again, a line chart's going to be moving. Oh, look at that. Now there's a big green bar, big green candle to be more specific. But we're watching how this plays out. And I'm going to let this, what I would like to see is for this price to actually come down here, and then we can watch this change to red, which would imply that the price is now actually closed lower than where it was. But as of right now, it's looking like this thing's going to want to put up a green candle here, but we'll see if can it come down even a little bit more. Okay, there we go. So notice that 1 minute's over. Now a new 1 minute period has started. So that 1 minute period is over. Now a new 1 minute period has begun. And notice how tiny it is. Well, that's just because, like I said, the 1 minute started, so it doesn't have much range. There we go. So now that's telling us that's as low as it's gone during this 1 minute. The price opened up right there, as you just saw a few seconds ago. And now look at this. Big move to the upside. Price is way up here, and because the price is currently higher than where it opened, that's why that would be a green candle. I really hope by this point you're saying, yes, Clay, I get it. Good. That means if I'm annoying you by now, it means that you're truly getting this, and that's the goal here. Hopefully I'm annoying you because you understand all the dynamics here. So, a question real quick would be, okay, I noticed that the price at one time got up as high as there, and as one time got up as high as there. So I wonder, can the price actually get up higher than where it was previously? In fact, you look right there, another high. So there seems to be something about this area on the chart that well, there we go. A new 1 minute candle has started. So now because the price is actually down below where it opened, that's why it's a little red right now. Because as of right now, the price has actually gone below where the price started during this 1 minute period. But notice, why is it such a small candle right now? Well, just because the 1 minute session has just started. So it hasn't had that much time to move around that much. Not that it's guaranteed to move around a whole lot, but that's why that candle would be, but now again, even more green. So just out of curiosity's sake, let's put this line up here, because I was talking about that level right up there at 283.97, where again, you look back in the highs and you can say, oh, well, that was a high. That was a high. So there seems to be something about that level where whenever the price has gotten up to that level, it just hasn't been able to push through. Now, a line chart is not going to tell you this. Why? So here's a very good quiz question on how well you understand things. Why would a line chart not tell you that information? Well, what is a line chart focused on? The closing price. That's all it's going to tell you. What did I say these are all? Well, they're the upper shadows, and upper shadows represent what? The highs of the price range. So this is one just quick and clear advantage of why a candlestick chart is going to be more powerful, because this is just simply not going to be showing up on a line chart. So here they are back to back, and we have the line chart over here, and we have a candlestick. Well, we had it until it disappeared, but there we go. So just notice how these are forming. Can't say that a line chart's totally worthless, like I said earlier, but you're just getting so much more data. You're getting so much more information that can help you make good decisions based off of how these candlesticks are working. So again, I'm very curious about this green line up here. Like I said, we've hopefully you can kind of see how these highs, multiple times the price has gone up there and bounced off it. And, can the price actually get above that area? But here we go. Now, potentially a red candle, meaning that from where this opened, the price may actually open below. And I realize I'm stalling right now, but I would assume that people that are like, okay, Clay, I know what a candlestick is, that they've probably turned off the video. But like I said, if you just enjoy each of these, and now, well, Clay, okay, there we go. Now it's getting up close to that level. Can it actually push through that level? Because again, just there we go. It got the break. It got what would be known as a breakout through that level. Now it's just a question of, can it actually get some more continue? And look at that. Notice how the price got through that level And notice how the price now is look at that. Got through that level and a big jolt to the upside. So in trading jargon, this is very simplistic, but that would be a breakout that we just noticed. What did we see a breakout of? Well, a breakout of the fact that this level here had once, twice, 3 times, 4 times rejected the price back down. But because the price did get up through it, well, now what are you thinking? What is this telling us right now? Now, if you're saying, well, wait a second, Clay. At one point, the price was all the way up there, but now all of a sudden the price is all the way down there, and now it's all, that was a failed breakout. Do you notice how bad that actually turned out to be? It broke above that level, and then as you watch that candle form, the price came all the way back down here. And now you have the price all the way down here. So this is a big turnaround. Again, this is great. And I'm just doing this live, so I had no idea this was going to actually happen. But think about it. And you saw it. At one point, the price was way up there. Now, all of a sudden, the price is all the way down here. Is that a good or bad situation? If you're saying, well, Clay, that's a bad situation. That's a stupid question. Exactly. And a line chart's not going to show you that. A line chart is not going to show you the high. It's not going to give you all that information. It's just going to show you where the price was at the close. So again, that's the big difference. That's how things work between a line chart and a candlestick chart. Well, good. I feel like that's a good way to kind of end on a real life example here to show that got a breakout. Problem is that breakout quickly ran out of momentum as we witnessed together. And we witnessed it together because we realized that at one point the price was all the way up there, and then all of a sudden the price was all the way back down there. So a nasty, nasty move. But just really do, as a final quiz, just to make sure everybody's on the same page, let me find a candle here with a decent range to it. So there we go. So this candle here, first question, what color is it? It's green. Because it's green, we know that this line down there represents the open. That line represents the close. So in this green, over 1 minute, the price the price closed higher than where it opened. It barely went down because you can barely see that little line right there. So that represents the low, and then up here represents the open. And then if you're saying, well, Clay, the candle's actually red, well, now we know that this was the open and the price closed lower than where it was and the price went all the way down there. And then again, you have the lower shadow right there. So that's as low as it went during that 1 minute period. And then the upper shadow up there was as high as it went during the 1 minute period. Now, as far as candlestick patterns and how you can use these and how you can apply those, for time's sake, I mean that's getting way far further into the weeds, and that's something that's not going to be and not the design of this video. This design, by the title, is just day trading for beginners, right? You're just getting started. You're new to the market. Maybe you've barely heard of candlesticks. Maybe you haven't at all. But like I said, if I did my job right, I really hope that you're going to consider learning more about and using candlesticks and candlestick analysis, because there's so much data that they're giving you. And in my mind, it's just a story that's being told to us. And when you use that story, you can really make some good decisions. Nothing's guaranteed. I mean, this is the market, so I'm not saying that. But again, we don't want to be gamblers. We don't want to just be making random decisions. But when you can use the chart and use all these data points with the candlesticks, then your decisions become much more educated. It's still no guarantees, but it's by no means some sort of just random roll of the dice or random guess or anything like that. So get out there, use candlesticks, and let me know if you have any questions or anything like that down below. If you enjoyed this video, if you enjoy kind of these very introductory, very basic videos, then hit that like button. That's a very quick way to communicate that to me, that you do enjoy videos like this. And like I said, if you have any questions or you just want to tell me, yeah, Clay, please keep making these types of videos, leave that down in the comment section below. And then also check out the channel as a whole. Lots of other content, lots of other videos. There's a segment that I do with live trade videos. So you'll see a whole lot more of these candlesticks in action with those live trade videos. And ideally, now you're going to have a much better idea of what you're looking at when you see those candles, and you're not going to be sitting there saying, whoa, is that the matrix? No, you're going to be able to say, hey, I know what those are. Those are called candlesticks. They were invented by the Japanese in the 1700s. Hey, and see, you're already making progress as a trader. So like I said, check out the channel, check out those live trade videos, and hopefully you ultimately decide to hit that subscribe button and become a subscriber of the channel. I would love to have you. But thanks for watching. And like I said, if you enjoyed, please hit that like button. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.